15 years ago to talk about India could emerge as the market to go was perhaps just an idea. Today, it is common consensus. But that was one idea which Ramesh Damani 15 years ago came on day one of ET Now launch and endorsed it. He said the best of India is yet to come. We were recovering from the global financial crisis. The world was in a mess. Nobody wanted to buy equity as an asset class at all. Everybody was moving towards gold, and the retail investor, well, they were not there. They were absent. On a daily basis, they were not buying, they were selling. Foreign institutional investors were also selling. The world was in a mess. So from where we were versus where we are right now, it's absolutely incredible to see how Indian economy, how capital markets, and how things have really panned out. But Ramesh Damani kept his faith going. I distinctly remember the first interview of the channel, and Ramesh said, the best of India is yet to come. You may not remember, but I remember and our viewers remember. So thank you for that 15 years ago.
Thank you, Nikunj. And before I proceed, I want to congratulate ET for your 15 years. I distinctly remember 2009 was a spectacular year. The first half it went down. But we ended 2009 with a gain of 80% on the Sensex. And the Sensex then was at the lofty level of 17,000. Today it's closer to 77,000. And for the record, ET has been there covering every single day, the highs, the lows, the good, the bad, the change of administration. That, of course, that year, 2009, was also associated with UPA 2 coming into power. So you've been there covering it all. So congratulations on a very meaningful anniversary, and best of luck for the future also.
Much. Now, one common theme with our anniversary and landmark anniversaries has been, when we started, there was UPA 2. On our 5th anniversary, well, there was another change of government. On a 15th anniversary, there is again one election cycle. How do you see the next 5 years different from the last 5 years? Last 5 years have been marred with COVID, but also a hallmark of wealth creation.
Nikunj, I learned somewhat earlier in my career from two of the greats, one of whom you know very well, Rakesh Jhunjhunwala. And he always told me and emphasized to me the importance of being bullish on India. And I think the events have borne him out very, very closely. I mean, in 2009, it was the lofty level of 17,000 the Sensex. Today, we are 77,000. Now, it looks like a huge leap from 70 to 77. But over a 15-year period, the CAGR is only about 11-12% on the Sensex itself. But the longevity of the growth and the sustainability of the growth is what's creating this magic that we're seeing in the market. So when we were young, if you remember, we all played this game called Passing the Pillow. And you want to pass the pillow soon because you thought the music would stop and you didn't want holding the pillow. Well, we're doing the reverse in this. I think the longer we hold the pillow, the better returns and the more money we're making as stock market investors. I see no reason. People always ask me this question, Ramesh, what is a good time to invest in India? We missed the last 5 years, 10 years, whatever. And I always give them the following answer, Nikunj. I say the best time to invest in India was in 1991 when Manmohan Singh rose and gave his interim budget, the liberalization budget. The second best time to invest in India is today. You can't win if you don't play. The market looks good, looks buoyant. And I think over time, it will head higher. There will be volatility, as we saw in the election time also. But I think over the time, 5 years from now, in your 20th anniversary, I'm very confident that the market will be significantly higher.
Mr. Damani, the differentiating factor for Indian markets has been the advent of retail investor. Mesmerizing numbers on SIP, mesmerizing inflows into small and mid-cap stocks, and a great leap of faith on 4th of June when market was in a disarray, when there was institutional panic. It was the force of Indian retail investors which really calmed the market panic down. What is the importance of this advent of retail investor? Is this good? Is this bad? Because history tells us that when retail is active, it's time to watch your back.
Not really. I think it's a good thing. I just wish they would, the retail investors would do a bit more long-term investing and a bit less F&O investing or F&O trading as they're prone to do. I just wish they move because, you don't get rich in a bull market making 20 points on a stock. You get rich in a bull market when the stock goes up 5x, 10x. As you would have noticed from the COVID lows, I can name almost dozens of stocks that are 5x, 10x, sometimes even 20x from the lows. So I do hope the retail investor gets to be in the long-term category as opposed to the trading category, which of course is happening through the SIP route. So it is happening through the SIP route. But individual retail investors, from what I understand at least, is pretty gung-ho on F&O trading, option trading, because of the tax incentives are lined up there. I think that's probably a bit short-sighted of them, but it's a great development. And we're the first time we're going to see that retail investors, domestic investors, and foreign investors who've been selling for the better part of last year will start entering the Indian market. And if that happens, we're probably going to have a melt-up happily, Nikunj.
Mr. Damani, we just had Rhythm Desai a brief while ago, and he said that, look, this bull market has a long way to go. Bull markets peak out when there is absolute euphoria, bubble valuations, or where earnings it starts expanding. We don't have anything. Market valuations are not stretched. They are high, but they are not stretched. We have excitement, but equity penetration levels are low, and we still are in middle of an earning expansion cycle. So can I say that we are nowhere close to what could be the historical benchmarks which have caused market peak?
A very difficult question because I'll answer it two ways. I mean, just to be honest and make sure your audience understands how difficult it is. On June 4th, the volatility in the market even scared a veteran like me for 30, 40 years in the market. I just saw that, and in our worst case scenarios, we hadn't assumed that the ruling party would get 240 seats, which is what they ended up with. So there was a feeling of trepidation going into trading that day. But as I've often told you in the past, we need to distinguish between volatility in the market and permanent loss of capital. And I think what we've seen is more cases of extreme volatility rather than permanent loss of capital. And I think a lot of people in the markets often told you that no matter whether it's the war going on or emissions changes, the bull market will continue in India. And I think I've slowly come to agree with that view, that the trick is to remain invested in high-quality businesses and be able to ride out what we call the stomach-churning volatility. Coming to your specific question, are we seeing signs of a bull market topping out there? We probably saw one on June 4th. At least I was afraid that was happening. But I think in balance, it was probably a premature call. And I agree with them that the bull market probably has ways to go. And the top classic signs that we see in a bull market are probably not gathered at this time yet.
You've been a PSU bull for the longest time. When you started buying into PSU stocks, you were in minority. Today, buying into PSU stocks is more like a mass view. Where are PSU stocks headed? Is the leadership still intact?
Nikunj, there's no question on my mind. The leadership is with the PSU stocks, and rather than pointing me out for buying them, which is good. Of course, I enjoy the returns and the results that have happened. I think a large part of the credit goes to the PM's office, the PMO's office, if you will, because they've increased the corporate governance of these companies. For the first time in India, the debate is now over. Everyone, including me, would say, well, we like the PSU stocks and we hope the government privatizes these PSUs so value can be unlocked and the national assets can, generate a return on capital for us. But I think that we are fine with the government holding it now. At least I have no issue with it. I think the government has shown they can extract value and deliver results year on year. And that has been reflected in how the PSU index have done. And I hope, for the record, I just kind of enjoy saying that a lot of your analysts who came on TV said very disparagingly about PSUs. They said, oh, it's a race to zero, or they said that it's a value migration reverse. I hope they're eating humble pie. There's another axiom in market that is very, very strong, Nikunj, that people should always remember, that everything is at a price. You can buy the best companies in India like Infosys or Lever and have no returns for 10 years because it is in the price, or you could bought the PSUs which they were practically throwing away at the COVID lows, and because buying it so cheap, you ended up making a lot amount of money in there. So, I'm very hopeful on the PSU basket here. We have rotated, we got on from some more, we feel, expensive, quote unquote, stocks into the cheaper stocks, like in the construction and the gas business. But we are remaining well invested within that basket.
Mr. Damani, you've always been an advocate of value, but your ability to identify the next big thing or the next growth frontier is quite extraordinary. So you bought into PSU stocks because they were cheap. But the other side of Ramesh Damani, and that's a super left brain, right brain combination, you're able to identify high growth companies, the next big thing. So if you have to migrate from value to high growth, how are you judging the market? Where are you investing? Where are pockets of high growth? What is the next big thing?
Great question, Nikunj, because we don't want to be certainly married to a particular sector in the stocks market or particular stocks. I mean, we want to have the fluidity of the brain to find value irrespective of which stocks. And we've been very lucky in this bull market. We found value across the spectrum. So I asked my son the following question. I said, look at what I'm doing rather than what I'm saying. And if you look at what I'm doing, I'm buying a lot of pharma stocks, which surprised me also. But I'm finding them good value out there. A couple of pharma stocks, for example, in India are chasing the holy grail, which is Ozempic, which semaglutide is the new miracle drug, if you will. So a lot of companies are going to make a generic version of it, going to make an off-patent version of it in 2029. They're going to make devices that use it. So there's a lot of play in that whole segment. The Indian companies are doing absolutely human work in terms of antibiotic research. So those companies and the other companies that just seem, good value at this point. So if you ask me where have I put some of the money that I have booked profits in, amazingly to myself also, because I've never been great pharma bull, is I've actually put it in pharmaceutical stocks, Nikunj.
Always said that the great India romance is consumer. What is the best way to bet on consumer?
I'm not sure. I always have a large positions in various consumer stocks, which have given me subdued returns in the last few years or so, you will. But, that's okay. That's a part of an overall portfolio construct. I'm fine. What I always tell Nikunj, people who come to me and saying that in individual stock, you can be wrong, you could be delayed, or it could give you superior or subpar returns. That depends. Like PSU gave superior returns, consumer, subpar returns. But on aggregate, on a portfolio level in India, if you are a good stock picker, you should be able to double your money every 3 years. And if you do that, it covers for a lot of errors that you make or a lot of laggards that you might have in your portfolio. So while I do have sufficient exposure to consumer in India, and that remains the future, I think a lot of the stocks have been underperforming for the last few years.
Mr. Damani, the pond in which you've always fished is this sweet $2 to $3 billion pond, where you like to buy mid and small cap companies which have potential to grow. But some would say that fishing is getting hard in that $2-3 billion pond, the mid and the small cap space, largely because of the way Indian markets have evolved, and B, in general, there is more awareness. So is it time now to perhaps increase the size of the pond, go to large cap ponds, not only fish in those small market cap companies?
I've heard that people have come on and off and said that, oh, the mid cap era is over, now you buy the large caps because the profit pool is greater. And that probably is true. But, to be honest, Nikunj, I've been equally comfortable buying stocks like Lever or buying, a small cap, a few thousand crores company at my end. We're pretty much agnostic. We try to find value. As my mother said, you want to buy rupee ki cheez athani mein. So whether you get it in large cap or whether you get it in small caps, we just happen to buy more in the small cap space a few years back. But I'm open. I mean, as long as I find value in those businesses, if you look at the future cash flows and find them, at a discount to that, I'm happy to buy those even at current rates. So to be honest, I'm not a large cap or small cap guy. I'm agnostic to that. I want to buy value always, and growth, of course, is also a component of value. So not just things should be cheap, but they should also have good growth prospects. Nikunj.
Mr. Damani, allow me to throw a question which perhaps talks about your current commitment, which is that what is your current commitment in equities? Are you fully invested, and do you plan to remain like that for next couple of years?
Difficult to answer what I'll do in the next couple of years because the market does, shake us out from time to time. To be honest, going in prior to the election, I was almost fully in equity, in fact, very little cash. I did raise some cash after the election results became known, but now I'm facing the very daunting task of reinvesting the cash. So to answer your question, I still believe in the long-term bull market. I was shaken up a little bit by what happened on June the 4th, but I'm now running the huge reinvestment risk. You locked in such strong gains for 4 years, after 4 years, and now you want to reinvest that money in, different companies and growth businesses is not an easy prospect. So don't have an easy job on my hand right now. But yes, to answer your question, I remain bullish. I would remain invested. And even though I'm not young anymore, I still feel young. So I want to not raise too much cash. I want to remain fully exposed to Indian equities.
I will be repetitive with this question, but I just want to establish it for the benefit of our viewers. And when I say that Ramesh Damani feels that the best of the stock market is yet to come, there may be pockets of excess here and there, but in general, the market right now is not euphoric, and none of the indicators which he follows are indicating that we are anywhere close to a bull market peak. I would be correct if I say that, sir?
I think there are things we don't quite understand about the market, Nikunj. I mean, I think as someone said that you need to live your life forward but understand it backwards, and that's true of the stock market also. Some things become more apparent in real. Now, for example, if the Dow Jones were to crack in America, as people have been calling it, because it's such a narrow rally and it's led by first the 15 stocks and then 7 stocks and now 3 stocks like Nvidia and so on and so forth. How will the market handle it? My feeling is that we'll handle it okay because of the huge domestic cushion we have to liquidity. But that is an open question, remains to be seen. But what my career in the stock market has taught me over the last 40 years is that you remain invested in India in great quality businesses and you'll come out ahead. To bring on the point we discussed earlier, Nikunj, when you started, the index was 17,000, the Sensex. Today it's 77,000. It's an absolute leap of 60,000 points, which seems like a huge leap. But it's just 12% compounded, which is, beating somewhat the rate of inflation. And I think India will continue to do that because of the immense growth potential we have. And I think just to bring you an additional point that you might want to discuss, I think when Nirmala Sitharaman, the Honorable Finance Minister, spoke in the last interim budget, she talked about what she wants to do for this budget. And one of the things she said was that I'm going to present a blueprint for Viksit Bharat, or what India should look like in 2047. So I think as market players, we'll start looking and saying, what is the exact vision and what is the scope for 2047 India, which is 100 years of independence. So my feeling is that while we will experience that occasional blood-curdling volatility, the winners will be the person to hold the pillows at the end of this game, or at least hold it the longest.
My next prompt perhaps is related to budget, which is that markets have now started debating, discussing, deliberating that are capital markets prepared for any change in tax regime? What is your sense?
There are 2 points, Nikunj. The first is I think the Honorable Prime Minister during the election campaign ruled out the biggest fear that the market had, that there would be some sort of inheritance tax or death tax coming into the Indian stock market so that he can tax their state at the respective lifetimes, at the end of the respective lifetimes. And I think he ruled that out categorically. So that gave the market a huge relief, because there was actually a palpable fear that there would be that sort of plan there. Now, the question remains, do you tinker with short-term, long-term capital gains taxes? And my answer is that you don't fix something that ain't broke. The long-term, short-term tax collection figures just came out today. They're up 25%. The system's working fine. STT is working fine. Money's being collected. The government has a large surplus. They have a glide path to a lower fiscal deficit. The question the market will be focusing more on is, will the politics of coalition government mean the government will have to spend more on states? And that is a question that only the budget may be able to answer. But I think this, whatever system is in place is working fine. Your collections are buoyant in capital gains, short-term, direct taxes, GST. Why would you want to fix a system that's not broken? So I would say that I would assume there will be no changes because the system is actually working real fine. Thank you.
You view AI, deep tech. Now they're disruptive, but that's also an opportunity for Indian investors who up until now have only or had only one option to invest, which is that you buy IT services, which was always like an cost arbitrage, which was always the theme of back office. Now things are changing because of AI and because of what's happening in the deep tech world.
Nikunj, my jury's out on that one. I don't know the impact of AI. It's profound. I'm pretty sure about it. I mean, it took I think 80 years for television sets to be with everyone, 20 years for telephones. AI is now, coming so fast that everyone has it on their phone. This very important piece of technology is on the phone. How it impacts us, I mean, if I look into the gurus, I would tend to be nervous about it. But I don't know. I mean, to be honest, I wish I had a better opinion for you. Will it impact? Maybe it will. Which sectors will it impact? I'm not sure at this point. But I'm assuming at this point my portfolio is steady as she goes. If I find that AI is now having an impact on some part of the portfolio, I will be happy to come back and talk to you about it. But right now, the jury in my case is out. I don't really understand the impact of AI could have on businesses, portfolios, markets over the next few years. I'm in the fog at this point.
Which means you've not sold the stocks which you own, especially in the IT services. Can I assume that?
I have not sold so far. No, I've remained, though they've underperformed dramatically over the last few years. But I'm just think that's par for the course because they were treated more as defensive and not cheap. But we'll take a look at it. I mean, I'm not going to demean or diminish the prospects of what AI means for us in the markets and for employment in a variety of sectors. But I'm not prepared to make calls based on AI yet. Though, to be honest, I worry about it and I think about it quite a bit.
India is now on what could be called as digital superhighway, both in terms of endorsing it and also in terms of implementing it. That really opens a large pool of opportunity for long-term investors like you. How are you picking your spots, companies or themes which would benefit because of Digital India? I
mean, the two themes, Digital India plus China plus one, have been important themes. And it's an extraordinary job that has happened in India in terms of Digital India. I mean, in terms of the payment gateways that we created, Aadhaar that we created, it's truly extraordinary in terms of productivity gains and the ability to monetize those opportunities over a period of time. And if you look carefully within the space, you are finding opportunities of companies, that are doing the digital stack technology, if you will. There are a few listed companies out there. I can't mention names, but they're, in the governance space, for example, that are doing people holding databases together. So, and there are a lot of export potential in this also, because India's done such a fabulous job of rolling out digital services to people. I mean, I don't know if you've recently been through an airport in India. I mean, the kind of Digi-Yatra services that we get is actually mind-blowing. We just face scan you almost through to security. So I think that is a huge, huge game changer for India. Very proud that we've been able to accomplish this on a budget at cheaper cost. There are ways to play this, of course, but not too many ways. There are ways to play it. But I think that represents a secular opportunity for investors. Out of railways, defense, to a large extent, roads, which is one policy-related theme you are still excited about? Well, Nikunj, to be honest, defense and rails now are well-discovered ideas in the stock market. So would I say that am I excited at these valuations for these stocks? I probably would. I own a lot of them, but would I recommend them as cheap stocks? I probably wouldn't. But if you look at the second rung of PSU stocks, those involved, say, in the construction business, or there's some thought that in this budget or around this budget, the government will introduce GST on gas. Now, that would be a huge benefit for some of the companies involved in that space. So I think you could, make some new bets or exciting bets at the public sector stocks, which are the leadership of the market, into these sort of companies. And, you'll probably look pretty good a few years down the road. Mr. Damani, 15 years ago, when ET Now started, your son was just about getting married. 15 years from now, in ET Now's 30th anniversary, I'm sure your grandchildren would be getting ready to get married. Right? I'm just putting some time frame here. So if you have to build a portfolio for your grandchildren 15 years from now, assuming that they're getting ready to get married, how would Grandpa Ramesh Damani
make it or construct it?
Thank you, Nikunj. It's a question that is a lovely question. Uh, You'll be happy to note that when my grandson Veer was born 7 years ago and my granddaughter Arna was born 5 years ago, one of the decisions his father and I made is that we'll set up investment portfolios for them, because we realized by then the power of compounding over 20, 30 years is so enormous that even if we start with small gifts, they will end up with a decent chunk of change by the time they're 20, 25, because I'll give them 20 years of compounding. So we've already started that. We try to find businesses that are, longevity businesses that will do well. So whether it's, say, the real estate business, which, is not immune to a lot of public, fluctuations, some of the defense companies in the portfolio. It's a great idea. I mean, I hope people will take away from your interview question is the importance, I think, that you need to start investing, not necessarily for yourself, but for your children, or if you're old like me, for your grandchildren. Because in the next 15, 20 years, if they compound that money even at 12, 15% over a 20, 30-year period, that's going to be a very significant piece of change for them. And, all they're doing is, they're buying whatever they're doing, they buy a little bit for the kids, especially good long-term investments. So your question is well-intentioned, that I have thought about it. I think about it constantly. I think since the grandchildren were born, almost the first birthday, instead of giving them gifts, which I have, of course, I also give them a gift of stocks, because I learned that from my own son's experience. The gifts he got in stocks as opposed to toys are so much more valuable today than the toys which are all gone and disappeared in life. So it's a great thing to do. And I think if you're particularly bullish on India and you believe in the long-term prospects of this country, and we believe that Viksit Bharat by 2047, we're going to be one of the top 3 economies in the world, you owe it to them to start investing even small amounts for the next 10, 20 years.
Fantastic answer. Thank you very much, Mr. Damani, and thank you very much for always accommodating our interview request. Thank you for joining us at important turning points. Thank you for guiding our viewers, and thank you for hand-holding them when life's not been great for stock markets.
It's been not only a pleasure, but a privilege, Nikunj. Thank you so much for having me and asking me on your birthday. And again, I wish you and your viewers a very, very happy birthday. I think the information and insights that you give have made individual investors a lot better than they were without you all. So thank you for the yeoman job you've been doing.
Thank you very much, sir.
If you like this video, then like, share and subscribe to ET Now.